July's CPI report is out and is less than expected. A second U.S. deal suitor offers $10 billion, and Argentina's government finally hit the panic button as it runs out of options and money. These are the top 3 headlines in this week's weekly business brief. First up, July's CPI report shows inflation gauge rose 3.2% less than expected, according to the CPI report. The consumer price index rose 3.2% from a year ago in July, a sign that inflation has lost at least some of its grip on the U.S. economy. Prices accelerated a seasonally adjusted 0.2% for the month, in line with the Dow Jones estimate, the Bureau of Labor Statistics reported on Thursday. However, the annual rate was slightly below 3.3% forecast, though higher than June and the first increase in more than a year. Almost all of the monthly inflation increase came from shelter costs, which rose 0.4% and was up 7.7% from a year ago. Rents rose 0.4%. The BLS said more than 90% of the increase came from that category, which accounts for about 1/3 of the CPI weighing. The comparative tame inflation levels help raise worker pay. Real wages increased 0.3% on the month and were up 1.1% from a year ago, the BLS said on a separate release. However, more economists are beginning to expect the U.S. can avoid a recession despite the aggressive rate hikes. Bank of America, Goldman Sachs, and JPMorgan Chase all recently had forecasts that a contraction is becoming less and less likely. Now, we're seeing that rents have gone up and that 90% of inflation is due to the cost of housing. Now, as interest rates continue to rise, I don't think we're going to see a slowdown in rents going up. Think about this just logically. As investors buy more properties and they have to pay higher payments on their debt, that means it's gonna come from somewhere and it's gonna get put on the residents. Now, unless a slew of inventory hits the market for vacancies and rentals, then and only then do I see that particular category of rent and housing softening some more. Next up, Esmark becomes a second U.S. deal suitor with a $10 billion offer, reported the Financial Times. Esmark, a privately held industrial group, said it had made an all-cash offer to buy U.S. deal for about $10 billion, including debt, becoming the second company in 2 days to announce a bid. James Bouchard's family-controlled group said on Monday it had offered to buy the U.S. deal for $35 per share, although it did not give any details on how it plans to finance the deal or names of investment banks and law firms advising it on the bid. The move by Esmark comes a day after U.S. Steel rejected a $35 per share cash and stock offer bid from Cleveland-Cliffs, the largest North American producer of flat-rolled steel. Man, can you believe this? A $10 billion deal. That is crazy. $10 billion, guys. Lastly, reported by Yahoo Finance, after years of trying to avoid currency devaluation that would add soaring inflation and reduce its popularity with voters, on Monday it did just that. The move was an admission by President Alberto Fernandez that his administration had run out of options and money to defend the unsustainable exchange rate after suffering a stinging defeat in a crucial primary election on Sunday. The 18% devaluation takes the official pesos rate to 350 pesos per dollar exchange, compared to 287 per dollar on Friday, and comes with another huge hike in the central bank's key interest rate. It was lifted 21 percentage points to 118%. The drastic decision will do little to calm investors, with Argentine assets slumping since the stronger than expected performance on Sunday by Libertarian candidate Javier Milei, who wants to dollarize the economy and abolish the central bank. Now, if they dollarize the economy, that's actually good for the dollar, right? Because the dollar gets more strength. And as you may or may not be aware, you have the BRICS countries, Brazil, China, Russia, India, Saudi Arabia, and they want to create their own dollars and get rid of the dollar, and they're attacking the dollar. This happening, this president taking the Argentinian new president, taking their means of exchange to dollars actually helps the dollars, in my opinion. Do you think what is currently happening in Argentina will happen in other places around the world? Let me know what you think and let's discuss in the comments below. And this has been your weekly business brief. I'll see you guys next week. And remember to like, subscribe to the channel to keep up with the latest business updates. Appreciate you guys. Peace.